What's going on, traders? Welcome back to my YouTube channel. This week has been absolutely epic. Personally, for me, I've just had an absolute astonishing week. And yeah, there's nothing more I can say about that one. I hope you have as well. I thought if you haven't, or you have, or whatever the case, why not go over some of the best trading opportunities that you could have got yourselves into if you were being patient, disciplined, and just waiting for the best trades to set up. Now, what is the best trading strategy? Well, you all know it, the break and retest strategy. And I'm not here to start an argument or cause a war down in the chat, but I'm just telling you now, in my opinion, break and retest is the way forward, and that's what I'll be showing you today. So we're going to be going over pound USD, gold, USDCAD, Euro Aussie dollar, Euro yen, Aussie dollar USD, oh, you name it. Lots of pairs, lots of trading opportunities, talking about some of the concepts and approaches and processes that you could have been thinking about before taking these trades. So without further ado, let's just skip over to the charts and take a look. So the first pair we'll take a look at today, it's going to be on pound USD. Now, I've gone to the 30-minute time frame, so the week started around the 25th, and I think maybe I should have just left this one to like in the middle and teased you guys a bit, but here I think is a great trade, right? So we're looking at the 30-minute time frame. What are we seeing? Well, the previous behavior of the market was, pretty bearish. We had a higher low put in with a new higher high, and then price respected that structure. So what do we expect? A new higher high. But the momentum started to deplete around this area, like pretty strong. Price didn't push up any further once it bounced off of this level, creating this double bottom pattern. Then all of a sudden, we see bearish sentiment and an absolute obliteration of this key level. Now, with these key levels, what we're looking for here is for price to break close below structures. And in my personal opinion, this is just too gorgeous, right? So what are we looking for? We're never selling in a push phase. We're looking for price to pull back. And here you can see we have a retest. Two options here with this trade, to be brutally honest with you. The first option is price coming into this level with a strong rejection, pin bar candle, and a bearish close. So a bearish body close here. And as you probably can see, we're now expecting the momentum to continue shifting down. Nice break-even range, and then if the market's making a new lower low, then obviously you'll hit take profit. Just a 1 to 2 risk to reward ratio here. Second option is to look here at this engulfing candle. So as you probably can see here, we had a strong rally off this level. What are you expecting at this stage? Strong momentum to continue to push to the downside, making a new lower low. If you don't take that and you're a bit more on the cautious side here, you look at this level as a level that price is created, and then you look for price to come back to respect that level. And then what do you have here? We have another opportunity to get in now on a potential double top pattern, and then you're just expecting the market to continue pushing down, and again another beautiful take profit. So I thought that was a great example to share with you. One opportunity you all could have taken advantage of if you was just waiting for the break and retest. Now, the next one, over here. We see with this uptrend, strong bullish sentiment. We know at the end of our uptrend, if the market starts to consolidate, we suspect a potential reversal. What are we waiting for? For price to break, close below these structures. And with a consolidation, what are we looking for? We're just simply looking for price to pull back to some of these key levels for a retest. Now, in and around this level here, we could have regarded this as a potential area for a double top continuation sell. But I was looking at this and asking myself realistically, who would have taken a trade where the momentum is so strong, price is pushed already enough within this one candle, range within this one candle, and there's not really a break-even range here. So you probably would disregard that and avoid being trapped in by this potential double top pattern. But if price comes back, I mean, what's the chances of price breaking above this level once it attempts to break, fails, and then you have a strong momentum down? More than likely, that's your retest. You're looking for a continuation, and then Bob's your uncle on this one. So another example I thought I'd share with you here. The next pair is EURJPY. Now, to me, this was the only trade that you could possibly be taking this week from a 15-minute perspective. Everything else seemed a bit dull, as you probably can see here. I mean, only just recently, but the markets have been rangy, not really too many break and retests, and even if they were break and retests, they certainly wasn't clean. This was the cleanest for me. Price breaks out of this consolidation, as you can see here. Now you do have a retest of it, but we're not going to focus on the same patterns over again. But you have strong momentum down, price creates a lower high. We're never going to sell into this level, but what we are going to do is wait for price to break strong, and then we're going to look for price to come back. The push to the downside was really clean. The pullback was really clean. And then, as you can probably see here, we have a super safe stop loss above the previous high. And if you wanted to, you could have had it down here. It's really up to you. I'm not here to teach you a strategy, because the break and retest is a break and retest, and how you decide to trade it is obviously down to you. But we have a nice bearish engulfing here, pushing to the downside, momentum shift, enter the trade, and again, Bob is your uncle on this one. So a beautiful pattern, just some concepts, break of structures, retest, and just looking for those wick rejection indecisions for those continuations. Now another one we could take a look at here is on USDJPY. Now looking from the 25th, we can see the markets have been consolidating. So at the start of the week, nothing major here. We're not really going to be working with this. But what we're looking for, if it's consolidating, is we're looking for the markets to break either the highs or the lows, come back to retest these structures. And you probably can see here, we have a break below the low, a retest, and then we clearly didn't break below some of these structures here. Now you would argue that if this was a 1-to-1 risk to reward ratio or thereabouts, would you go break even? I think the answer would be yes, but you may have not got it to break even. So this one, I guess you would just accept a loss on it, or it really depends, maybe a stop loss half, I don't know. But that was the opportunity I saw around the 26th that I thought I'd share with you. And then the prime opportunity here, I think, was just a winner. Chicken dinner, they say, is a break above this structure. We see price breaking above again, not only breaking above, but we have a lot of behavioral evidence here of price failing. Then that continued momentum. We're not entering immediately because we're patient traders. We're just waiting for price to come back. Strong volume in the market here, bullish candle to the upside, and that's it. Bob's your uncle on this one. Enter the trade, and there you go, 1 to 2. Next pair we take a look at is gold. Now gold has been doing a whole heap of stuff. Personally, from what I can see, don't make sense, but from what I can see, right? The market has been consolidating. We cannot argue this. From the 25th on the 30-minute time frame, it's been consolidating. What are we looking for with consolidations? Well, we're looking for a break close below structure, looking for the markets to come back to this level. If you're not convinced by this bearish candle to the downside, you don't take a trade. But if you are patient enough and you're waiting for more evidence, look at this. Strong bearish candle to the downside. We're not only breaking the lows, but we're violating a level where price held for about 90 minutes. And then what do we suspect the market to do? Continue pushing down. Now there's an argument here that you wouldn't take this trade because Rock says if you don't have a 1-to-1 break-even range, you don't take it. I get that. Well, we're not here to follow my rules. I'm here just to show you, share with you some ideas. If the trend is down, trading below the brick wall, the market's making a lower high, double top retest of previous structure that's broken, you only anticipate the lower low. How you plan to trade this with your own risk is down to you, but I think this was a beautiful, beautiful opportunity that you could have taken advantage here on gold, waiting for the break and retest. Very simple and clean, and all you're anticipating is a trend to continue down to make that lower low. The next one we'll take a look at is EURUSD. We actually have two here to look at. So the first one here is just this break of this area in the market. It was moving sideways from a high time frame perspective. That's why the candles are just obviously not breaking highs or breaking lows here. But what are we looking for in a situation like this? Well, you're looking for price to break lows. Now, the market makes a lower high, comes back to this lower high, and it definitely does look like an opportunity where we can sell it again. Now, if you did sell this here, this is completely fine, but just a concept I want you to think about. If you sell this here, and you place your stop loss above this level and go for your targets of 1 to 2, you're putting yourself in a situation where you're always going to be at a disadvantage. Simply because you know the major key level you want to be working with, or in theory should be working with, is at some of these major highs. If you take it, it's not wrong because price could make a double top pattern, but it is wiser to let it go, walk away, and just wait for the market to come back to a key level and then look for that reaction. Once you get the reaction from the key level, after this bullish momentum has depleted and turned bearish again, you have two options. You can take the trade at this key level with whatever evidence you gather, or you can wait for the momentum shift again to continue pushing bearish and then try to identify some of your patterns on the way down. If you want to take a double top like this is completely fine. And the reason why this trade is much better, as a double top than this one is because the momentum coming into this level is bullish, whereas the momentum taking this sell is bearish, and the trade that you're going to be taking is bearish. So you have two added confluences plus the trend, which makes it free. So yes, great opportunities there on EURUSD. Another one I thought I'd share with you is over here. Again, same concept here. Strong bearish momentum, key level created, key level respected. Again, you're not looking to trade below it. You're looking to try and take into account, you know, most of the wicks. That's where price is reacting to. Then you're looking for the bearish momentum, and then you're trying to hit that with a sell, however you plan to enter the trade. Again, following momentum, you're just looking for price to break structural lows here, create a new lower low, create levels, and then show evidence of momentum. It really doesn't matter how you do this. It's all the same thing. And the only reason why you wouldn't be able to take these trades or have an opportunity to take them is one, because you're too impatient and you've been taking all the wrong trades, or two, you just don't have any money left to take any more trades because you've taken all the wrong trades. Next pair we'll take a look at is Aussie dollar USD. Now we can see that the structure of this market, to be honest with you, from a 4-hour perspective, is the only pair that I think this week we would have got a nice trading opportunity from a 4H perspective. But we can see that the overall structure of this market is pushing down. We have a level created, price making a new lower low, and then price coming back to that key level to show 12 hours worth of information to confirm price is failing to push back up. Once we get that evidence, we're looking for the momentum shift, which is this bearish candle here, and then you're looking to ride this trade back down to this low for a break-even trade, and then going risk-free to then see if the market can continue down to hit your take profit. 4-hour time frame, structure is structure, break and retest, same principles and concepts. The next pair we'll take a look at is Euro New Zealand dollar. Now with this pair here, this was one of the analysis that we done at the start of the week. We had an area where the market was moving sideways, and we called this a no trading zone. So when I was speaking to my members, I said to them, this is a no trading zone. Price is moving sideways. What we're waiting for patiently is for the market to break structure, retest, and continue. It broke the structural lows, especially on the 30-minute, well, on all time frames really, but here on the 30-minute, it broke the structural lows, but it never retested it. So what are we doing? We're waiting again. We're never trading in the no trading zone. Wait for the break of structure again, wait for price to come back, and there you go, Bob's your uncle. Momentum shift, bullish sentiment, retest to confirm the exhaustion, and after an exhaustion, if the momentum is bullish, we expect a continuation to go up, and clearly did. So this was an absolute gorgeous trade on Euro New Zealand dollar. Targeting some of these highs for a break-even risk-free trade, and then seeing what happens if we hit these take profits along the way. Next pair that we'll take a look at is pound JPY. This pair has been an absolute mare this week. To be honest with you, it's been on the back burner for me. We've had signs of pound strength at all-time highs for a while. We've had yen showing strength, then we've had pound recovering. It's just been a mess. Personally, I would say some of the best opportunities you could have been looking for this week are potentially some of these double top areas, which, to be honest with you, it's completely fine to take these trades. You know, you're looking for price to create a level and then come back to respect that level. So from the 25th, if this is something you wanted to do, you could do this. This was at midnight, which is not really a problem, to be honest with you, but you are looking to trade out of the high spread zone. So this would have been like a midnight trade. So that's why I really didn't highlight it. And if I've highlighted a few more that were midnight, then it is what it is. But to be honest with you, that's the only trade I can really see from a sell perspective. But the best trade for me was once the market started to push to the downside. I'm expecting lower lows and lower highs. If price doesn't create lower highs or respect previous structure levels and then starts to violate them, I start to switch my bias in thinking that the momentum and sentiment is going bullish. And once we break close above structure, I'm looking for a retest, looking for those candles to form wicks, engulfing candles, whatever you guys want to call them or ladies want to call them, and then taking a trade. Again, Bob's your uncle on this one. The next pair we'll take a look at is USDCAD. Now we can clearly see this is probably the most gorgeous setup that you probably could take in terms of aesthetically pleasing, or what's the other word I usually say? All these acronyms. What is the other one I say here? Visually something. Oh, don't know. Anyway, trend is up, right? High highs, higher lows. Prices respecting structures. We have a key level here. Price is failing to break above. All I'm looking for is for the break above. Once we get the break above, I'm looking for the wick rejection, strong candle. Make sure we get a break-even range here, and that's it. Slap buys on this one. Follow the trend. Do not deviate. And guess what? You're laughing all the way to the bank. Okay. Final pair we take a look at is Euro Aussie dollar. This is on the 30-minute time frame. Now, just want to have a question for you guys and ladies. Would you take the sell? Now, it's not wrong, because if the market's trending down, you have a break of structure, there's a retest, there's a strong engulfing candle, you expect price to continue down to make a lower low. So based on that principle or concept, it's not incorrect. But really and truly, the question you should be asking yourself is, would you really want to be selling directly into this level? Probably not. It's not wrong, but probably not. So we avoid that one. Once we avoid it, or we take it and we lose it, it doesn't matter. Price is in an area where we're not really going to be looking to take trades. We're looking for price to break structure, retest structure, and then look to continue up. As you probably can see here, we have one trading opportunity here, back to these highs. And if you don't take this because you want to see price get out of this range or traffic area, again, you're just waiting for price to break above structure. And let's say we don't want to take the trade here, we want to scale down to 15-minute time frame because we want to look for more evidence here, then this is what you can do. Multiple wick rejections, take your trade wherever you want, and then look to continue riding this up. Again, when price breaks structural highs, all you're looking for is for price to come back to some of these levels here, scaling down to the 5-minute time frame, looking for those retests of those structures, and then again, simple trading. Break and retest, 1 to 2, 1 to 3, whatever you trade, and that's it. Bob's your uncle. So traders, I hope you enjoyed that. Hope you got an idea of how simple trading really can be. Everything that you struggle with is all mental, and how you deal with it is all emotional. So make sure that you continue to build confidence and faith by going over some of the pairs that you traded this week. Figure out some of the trades you took were actually in fact good trades. If they were, accept them even if they were losses. And if not, figure out what you can do next time just to tweak what you're doing so that next month, going into the second month of the year, you're able to continue growing as a trader and continuing to learn. So yeah, that's it really. Until next time, I guess, take care, be safe, stay disciplined, trust the process, and smash that like button, subscribe and turn on notifications. Bye-bye for now.